right, everybody. Happy Wednesday. How you doing out there? You having fun yet? I'm just going to say that every day. Welcome to our show, The Closing Beat. We go over the stock market, the good, the bad, and the ugly. We've got more ugly to talk about today, but today's going to be kind of a special edition. I've got to talk to you guys a little bit here. We got to give you a little bit more than what we normally do. So if there's one show that you kind of stick with me and don't fade away or don't gloss over, or don't pet the dog, I know all of you are working from home. This may be the one you want to stick with me here. And of course, as I always do, when we're done here, I will take questions to see what I can answer for you. We're also playing a game. It's called Guess the Dow. You go to the website there, jazzwealth.com/guess the Dow. You can tell me where you think the Dow is going to close next week if you're the closest without going over. Send you a $100 gift card. Happy to do that. Tomorrow's class for customers is going to be more stats-oriented, current events-oriented. I didn't have a fancy title to give it. We're pushing back some of our other classes to kind of focus on what's going on right now. So we'll cover that. We'll also kind of be like a free-for-all. We'll take some questions there as well. Be real more like a hangout, but of course I'll have the geeky stuff for you guys as well, talking about markets that fall 30% plus, 20% plus, going over every single recession, things like that, in a fun way, short way. I won't bug you to death there, but we're going to go over that tomorrow at 8 o'clock for our customers live in the dojo. Our Jazz Artist of the Week I was listening to last night from the hours of 10 p.m. till 3:30. I'll tell you what I did in a second, but his name is Oscar Peterson, one of the great pianists, jazz pianists of all time. Just incredible. The song is called When Summer Comes, right? Because I thought, man, I bet some of you can't wait till summer comes and we just put all this behind us. We get back to the beach. We start living our lives a little bit, no matter where you stand on what's going on out there. But I hope everybody's well. Hey, one quick shout out to our customers. You're keeping me busy. I love it. This is my job. This is what I do. But the 4 things that we covered about making adjustments and how you make these adjustments to your investments during downturns, you guys are killing it. I love it. You guys are killing it. I love it. We're on it, and I'll continue to be addressing that as we go. We're also going to play sort of a game today as I teach you something. We're going to pretend we're on Shark Tank, and so as I give you some of the data as we go, that's what we're going to go through. As far as the stock markets today, you got 1,300 points lower on the Dow, but we are off the lows here after hours because of that bill that was announced, the stimulus bill that or part of it that's being sent to Trump. 130 points lower on the S&P, and the NASDAQ 344 points to the downside. If we take a look at the S&P here, you can see we made new lows. Got a little bit of a washout there. Volume did pick up on the day. People throwing in the towel at lows there. Tell me, who sold? Right? I got a phone call the other day, a new customer actually, who said, that was me, I sold. You said, who sold on the downturn? That was him. We're going to get him straight, but who sold today, huh? Who panicked and sold? We're going to cover some of the stats for you. Actually, after hours, we're down only 3% on the S&P, so you got a bit of a rally. You can see the tail on the charts there. If we look at the Dow there, the Dow also doing the same thing, only down about 4% after hours, sub 1,000 loss on the day. The NASDAQ, which was the best performer out of the day today, hit lows, recovered late day in those from those lows, and is now basically back to where it started, at down 2% at the moment. So really not that bad compared to the normal market, what you saw happen today. We did get halted throughout the day today. That's like the 4th time in 7 days or some stat like that. That's not normal. That doesn't happen. They're talking about implementing the uptick rule and everything. So we'll see what happens, right? It's whatever it is. It's going to be what it's going to be. But that's the overall stock market today. Now, for the S&P 500. Oh, let me see here. I do have it for you. For the S&P 500, this is officially the steepest and fastest declines from highs ever. It's also the official the fastest and steepest that it's ever fallen 30%. So you got the Great Depression in there. You've got for the financial crisis, or the Great Recession, as they called it there. Not one of those has fallen sharper or faster than what the current S&P is doing. Oh, here it is. I put it on a chart for you. Here is the performance off of highs. So what we did is we just took a normal chart and we said, put the highs at 0, that's your black line there, show us how far we've fallen from highs. Backed it up a little bit to show you, here's 2001 and 2. We lost 49% from the highs when that was marked. In the '08 crisis there, we fell 56% from the highs. I'll cover this in a minute. We did not close the year down 56% from the highs. And here's where we currently stand at the close, 30%, let's call it 31% off of the highs. And you can see, obviously, the severity and the steepness of the downturn there. This is the 7th time in history that we've fallen 30% off of highs. It is the fastest on record, of course, as we go through that. And tomorrow night for our customers, I'm going to go through a whole lot more stats just to keep you guys filled up with all the information and what's going on. The NASDAQ did beat the S&P today in terms of performance, continues to do that. The Russell 2000 was the weakest. Russell 2000 had a bad day, let's put it that way. Down 11% on the day, now down 7% after hours there. I will continue to say we are not getting a meaningful rally in this stock market until we either see a downtick in the number of new cases of coronavirus, because that's what everybody's focused on, or we get Washington stimulus, which it seems like they're working on. I think by Friday we'll probably have something. At least that's what they're saying in terms of the stimulus packages or the beginning of the stimulus package. Our video today, FinTips video, went over what happened in 2008 when they sent checks to everybody. How did that go? How did you know if you qualified? What were the criteria? I covered all of that in today's FinTips video if you want to check that out. So it gives you an idea of what maybe to expect if they start handing checks out. I can't say it'll be the same, but we'll see. FedEx in the S&P was one of your stronger stocks on the list, up 5% today. That's earnings. They matched on earnings. They did withdraw their guidance overall, but everybody was expecting them to miss on earnings. Didn't happen. That was one of the stronger stocks. Walgreens has been strong. I mentioned this the other day, where people are still going to Walgreens, buying up whatever they're buying. They ain't buying candy. I keep going to Walgreens and CVS on my way home. That candy aisle, stocked to the brim, man. I've had more candy than I could probably handle, so, you know. A man knows his candy. You got Gilead Sciences, 6.5% higher on the day. And of course, Kroger, strong. So Kroger is just killing it. They're hiring 1,200 more people. One of our customers works for Kroger, says he's working nonstop. He's soaking in the dough. He's having a good time, trying to keep safe, of course. Up 3% on the day, did hit new 52-week highs. On the downside, in the S&P 500, Coty. These guys make makeup and things like that. Lost 31% today, now $3.71. That is 76% off of highs. So a 76% discount if you choose to look at it that way. Do your research. Don't just buy stocks because they're a discount there. And also you had United Airlines. And this brings us to our game for the day, the sort of scenario that I want to outlay for you. 30% down off of highs. They're going to reduce their flights by 70%. Well, not, you know, and they have to, right? And not a lot of travel going on out there. They're reducing flights by 70%. And let's use this stock to start playing our game here. You see what the stock is doing, right? $21 as far as the price of the stock goes. I've been mentioning a few times Visa. I mentioned MasterCard. I mentioned, what was it? Chipotle. I mentioned Marriott. And how the companies are saying, yeah, we expect to take a hit, but not what everybody's forecasting in the price. And I sat last night from about 10 o'clock to 3:30 in the morning. Be honest with you, I sat quietly. I put on some Oscar Peterson, had a tall glass of Milton Park Shiraz. I enjoy that. That's a good Shiraz there. And I said, well, let's dissect this. Let's take a look at the markets without the TVs and just see, do we really have something to worry about here? What is the current pricing of stocks and the markets there? I called up a few analyst friends of mine. I said, send me all the data you got. Whatever you're working on, I'll take it. I don't need it fancy. I'll read through it, and looked at all kinds of good stuff there. Now, United Airlines, $21 stock, okay? Just plummeted, right? It's having a hard time here. They said, the company themselves says, we expect to take a $2 billion hit this month compared to our revenues from last month. $2 billion. They do $43 billion in sales a year. Even if we assume that that number comes down because of this, which they're saying $2 billion, that's a 4% hit. Remember, Visa, MasterCard said maybe 2 to 4%, we're going to take a hit here. Nobody said we're taking a 50% hit on their prices, right? So this is United Airlines. Now, what I want you to do is pretend you're on Shark Tank right now. Everybody's seen the show, right? If you haven't seen Shark Tank, then you've probably got some time off from work. You have some time to watch some Shark Tank if they ever play it again on CNBC. Great show, also played on ABC, I believe, on Fridays or Sundays. Okay, United Airlines has sales of $43 billion. Let's just assume it drops a little bit, and we're at $41, $42 billion, somewhere in there. The current valuation of the company is $25 billion. Now let's do this. Pretend you're on Shark Tank. You walk in and you're United Airlines and you're like, Mr. Wonderful, Mr. Cuban, Barbara, how's it going? Everybody doing good up there? I'd like to present an airline offer to you. We have a company here. We are seeking whatever we're seeking. We do $47 billion in sales a year. We put a value of our company at $25 billion, which is half of what they sell. Does that ever happen on Shark Tank? Do you ever see somebody come in and say, we have $1 million in sales and we think our company is worth $500,000? It doesn't happen, right? If you've ever seen the show, people go in and say, we did $1 million in sales, we'd like to raise $10 million, something ridiculous, right? And they always beat them down from their prices and everything, right? Now, imagine this. You go into Shark Tank and you say $47 billion in sales, $25 billion valuation, half, we're discounting our company by half, and they go, you know what the Mr. Wonderful in the middle is going to say? He's going to say, okay, you have 47 billion in sales. Are you making any money? Right? That's how he says it. Are you making any money? And imagine United Airlines going, yeah, actually we have a 10% profit margin. After tax, after everything's said and done, we have a 10% profit margin, or $4.7 billion is our profit. Would you invest in that company? If you were one of the Shark Tank panelists, I'm reaching out to you guys. Of course you would. I'm not telling you to buy the stock. I'm not allowed to say that. But if you were a Shark Tank member, would you say that? Would you invest in that? Oh, and let me throw one more thing in there. They pay a 5% royalty, right, if you invest in the company. So imagine going to Shark Tank. We're saying we're worth $25 billion. We do $47 billion in sales, $4.7 billion in profits, right? 10% profit margin after tax and everything. We all pay ourselves. And if any of you wants to invest in our company, we'll give you 5% royalty on all of our sales, right? Now it sounds like a ridiculously too good to be true offer, doesn't it? That's United Airlines. So what I did is I said, well, okay, that means United Airlines is way underpriced, way undervalued, and people are purely responding to the news, the excitement and all that stuff. I get it. You know, people, you watch the TV, you get a little excited there. Now, imagine this with the entire market, right? What's going on in the market? You have 70 stocks in the S&P 500 down 50% or more year to date. Not from highs, not just, oh, it's been a bad few days. No, 50% or more year to date. Think about that for a second. Half of the S&P is down 25% or more year to date. Here are the stats on this, and my customers know this because it's in the market decline, it's in the S&P distribution class that we did in the dojo. You can go check it out. There is only a 21.3% chance that the stock market finishes this year down more than 10%. Do you know that? Only a 21.3% chance. That's not my opinion. That is historical statistic. Of course, there's the possibility, like 2008, we finished down more than 10%, right? But there's a 21.3% chance. That means there's a 78.7% chance that the stock market finishes down on the year, but something better than negative 10%. And yet we're sitting here down 30% because of a temporary virus that some people go, oh, it's the flu, right? No, I don't care what the argument is, but we are down 30% because of temporarily having to take a hit. United Airlines says it's going to cost us $2 billion. Did they say that this is the end of the world? Do you think they're not factoring this in? This is incredible here. So in 2008, we were down 56% at one point. That hurts, right? But by the end of the year, we were only down 38%. Looked it up. I mean, I looked at every number last night as possible, right? So let's keep playing the game. Shark Tank. Let's say you're Boeing. Boeing has obviously been beaten down by this whole virus thing. They already had their planes grounded. They took a hit because of that. And they got the price of oil, what, 20 bucks? Did you see that today? The price that we'll cover in a second, 20 bucks, right? Boeing says we do $84 billion in sales a year, right? Wonderful sharks out there. We do $84 billion in sales a year, and we're valuing our company at one-time sales, meaning $85 billion or $84 billion. Is that a good deal? Keep in mind, they pay a yield and everything as well. Carnival Cruise Lines, they do $20 billion in sales a year. They're not going to do $20 billion in sales this year, so that's the caveat, right? But they value themselves at $12 billion. So even if this temporary virus causes them an $8 billion hit, which they don't even think it's going to take that much off their bottom line or top line, then that puts them at $12 billion. That means that they are valuing themselves at exactly their sales, right? They have obviously a profit margin there as well. Advanced Auto Parts, $9 billion in sales, and it values itself at exactly that. Right? Less today, I believe, probably by a little bit. Discover Financial. Discover Financial has a 24% profit margin. So play the game with me, and I want you to share this part of the video with anybody that's really stressing about the markets right now, because I could go on and on all day. I have a list of stocks. I could literally read off 68 different stocks. But let's play the game. You are currently Discover Financial. A lot of you have Discover cards. Did you know they make a 24% profit margin off of you? That's huge. I believe Visa or MasterCard has a 50% after-tax profit margin. So let's say we go into Shark Tank. Mr. Wonderful, I've got an offer for you. I do $12 billion in sales a year, and I'm valuing my company at $13 billion. I put just a little extra on there, right? Think about that. Do you ever see that on Shark Tank? I wouldn't go in there. Jazz Wealth, we'd like you to invest in the company. I would give them our sales, and then I would say, I value the company at a lot. I'm here, I'm working more than any other advisor. I think we're worth 10 times sales, right? They would beat me up. But I would go in saying something like that. We do not have that anymore. We don't have a market that says you are worth 10, 15, 20 times sales. 1 time sales. Does that not represent a discount? That is pricing in economic doom and gloom. I don't know how else to say it. That is pure doom and gloom priced into the markets right now. Ask yourself if this is really a doom and gloom type scenario. And I don't care what Bill Ackman said on TV today. He was clearly talking his book. I got that question probably 50 times today. Oh, do you think Bill Ackman's right? Should we shut down the world for 30 days? No, he's talking about his investments. And I would do the same if I were him, to be honest. He's got short positions. He wants those to stay low so he can get out of those positions and report a huge profit after the whole Herbalife issue that he had. So he has to show, obviously, a sizable profit. That was all that was. Simple as that. At the end of the day, we have a stock market that is so overdone to the downside that if you're panicking about this, you have a right to, right? You have a right to be nervous because you're probably sitting there going, it seems like a little much, right? Like I can understand 10, 20%, something like that, but we're going to be shut down. Let's say this hurts us for 35, 60 days. We already have companies themselves saying we factored in worst case scenario, 2 to 4% hit. So what's the deal, right? The deal is panic. The deal is Robinhood. The deal is free commissions. The deal is the people that are calling their advisors saying, I don't care, I just want out. Do you know that the median bear market recession is exactly 30%? Where are we today? 30.88%. So we are at what is expected for a bear market recession, and not one person has said this is a recession. Everybody says, well, this will probably be marked as a recession, but this is not a recession. So you would be panicking at what is perfectly normal for a bear market recession. We're going to cover more of that, of course, in the stats tomorrow for our customers there, but holy cow. I mean, take a minute and go look through some of these stocks. And I know you guys watching, you're all excited, right? You see the stocks falling and you love this. But think about all the people that are nervous, your family members that are sitting at home. They're not tuned into the market every day and they're panicking. They should, because every freaking news channel is pointing out that you should be panicking and oh my gosh, this is a big deal or whatever. And okay, that's fine. But if we're talking about closing down the world or halting the markets for a little bit, we should halt the news as well, right? Turn that stuff off for a little bit. Go grab a glass of wine, listen to some good jazz, and take a look from a purely analytical perspective at the things that you want to buy or are buying. Is it a discount or is it way, way overdone? You know what we did today with our portfolios? We sped them up a little bit. Right? I think I can say that. If this video comes down, then this will be the reason why I had to take it down. But we sped up a little bit. Not a lot, just a little bit, right? No need to be a hero, but we sped up. Run into the fire. Don't run away from it. For God's sakes, you will regret it. I promise you, you will regret it. Okay, very quickly, let me go through some of the sectors here. I had a whole lot that I was going to go through. Oil down 70% from the highs here. That's the real story. Right? If the virus didn't take us down, oil was going to take us down. So like it or not, this was going to happen. We were going to have to prepare for this. The headlines would have just been oil war. We are literally at war with OPEC, Russia, OPEC plus, whatever you want to call it. Not like a physical, going to kick your butt kind of war, but we are physically at war, price war, in the price of oil there, down 20 to 20 bucks. Home builders broke to the 50% discount today. If you want to take a look at that, Pulte Homes, Lennar, severely discounted. Transportations, that's going to be your airlines, United Airlines, Delta Airlines. Now you know why they're valued there. FedEx did the best because of earnings. Semiconductors, new lows, was worse for the chips. Broadcom, AMAT, what was the other one? ASML was the other one there. Consumer staples, healthcare, and utilities continue to hold up the most if you're interested in those sectors there. And so that's it for the sector update there. I'm going to skip the other new highs, new lows. There's nothing new there. Oh, Carnival Cruise Lines broke the $10 mark, right? They did. They closed down at $9.30. Remember, it was just 3 weeks ago. It was actually 4 weeks ago that I did the video and the class, but 3 weeks ago, there was only one stock above $10 or below $10 in the S&P 500. You know what stock it was? Only one stock out of 500. Let's count all of them. There's 505 different stocks. Some of them are different classes of shares, but let's count all of them. 505, there was only one that was under $10. You know, today there are, how many are there? Where did I put that there? Today there were 71. Where is it? 3 weeks ago, Ford was the one, by the way. It's 41. As of lunchtime today, it was 41 stocks were below $10. You think that's warranted? Do you like cheap stocks that maybe you're just getting a little over punished to the downside? And we can go through maybe a couple other things here. Tesla ordered to close their plant. I don't think they did. I think they kept it open. I'm seeing all the tweets out there that there are people still showing up for work. They were ordered by California to close their plant. I think for the moment he said, no, we're going to keep producing cars. ExxonMobil raised $8.5 billion. That's a real story in this market. ExxonMobil raising $8.5 billion. The oil space is just getting crushed, right? They're going to need help big time. That's the real issue there. And if we ever get past the virus, you know the attention is going to turn right to oil. That's going to be to keep your eyeballs there. Walmart was upgraded at Credit Suisse. It was a poor upgrade. I won't even talk about it. Ralph Lauren upgraded at Bank of America. Bank of America had a couple different upgrades today if you're interested in things like that. They were one of the first analysts to speak up and say, now the way they say it is not as emotional, I guess, as maybe I have, but the way they tell you that stocks are good to buy is they say the downside is priced in here, meaning downside expectations are already priced into the stock, and therefore this is a good value. That's what they said about Ralph Lauren and about a half a dozen other names in the space as well as other spaces. Simon Property Groups, it's unfortunate for them. That went from about $150 to $44 just in the past, 13 days or so. They're closing all their properties there. And remember, this is not because the world's ending. It is because they're trying to help stop the spread of the virus. That's it. That's the end of the day. That's what this is. When they open back up, people will go shopping again. I will, I know. But that's what we have going on there. Okay, as far as earnings tomorrow, you got Darden Restaurants. That's going to be interesting. It's going to be interesting. I believe all of their restaurants are closed now. Darden Restaurants down 18% today. Earnings tomorrow, which will kind of reflect what we're working on with this virus. Lennar, Children's Place, Ollie's Bargain Outlet. Really already? That seems quick. You got Tiffany's paying out 58 cents in dividends. Walmart 54 cents. Big Lots 30 cents. And Advance Auto Parts 25 cents. Hope that helps you there. Bottom line here, if you're paying attention, is some stocks, yes, they deserve to be at the price that they're at. You can plain as day. You can see it. They deserve the price that they're at. They don't make any money. They were sort of hyped on future expectations, and they're paying the price. There are a lot of stocks and the stock market as a whole, which is completely oversold, well beyond anything that you could ever even want to price in here. And watch how you see analysts start to find very the words to use that make them sound educated, right? To say, you guys are being silly, right? This is a discount. Watch, it's starting to come out there. Anyways, I'll take a chance here and try to answer some of your questions and see what I can do. You guessed it right. Ford was the stock that was the only stock under $10 prior to this thing going on here. Yep, you got it. Yeah, well, we'll see. Yeah. Time to dip your toes into everything. I'll keep the same comments there. I'm not saying you should run into the market. I think you have time. We're less than 3 weeks away from earnings season beginning. Actually, I think JP Morgan's on April 13th or 14th. But that's going to be interesting. That's going to keep the volatility alive. So I'm by no means saying that people are done panicking here. I'm just saying this is well beyond ridiculous. I mean, we're all going to laugh. I'm not a guy that says I told you so, and I will not say I told you so when this bounces. I will share interesting stories, and we can all kind of talk about it at that point, but we're all going to laugh about this, in my opinion. Yep. Your local pool's closed, man. Oh, man. I hate it, man. That sucks. If you're looking to enter the market from a blank slate, oh, awesome, if that's what you're doing. How do you make sure your portfolio is diversified, such as a steep bear market? Well, you know, the lazy answer is to say an index fund. That's the end of the story. And by the way, every single call that I'm taking right now from people just asking about us or whatever, they have index funds. And I mentioned this a long time ago where people say, oh, just buy the index fund. But then when the markets fall real quick, you go, holy cow, should I be in an index fund? And that question comes up. So from a broad perspective, maybe an index fund, I would use ETFs if it were me, if you're thinking about getting started. If you have the time and you have the interest, maybe you go look through the sectors in the S&P. There's only 11 of them, and drill down into the individual stocks. So you start with the index that you're interested in. Let's say it's the S&P for simplicity's sake. Then you look at the sectors and go, is there any sector that I just want to buy the whole sector? If you find a good sector or some individual stocks inside of it, that's the next leg down. Top-down analysis, it's called. I think it was you, Jeff, said those free commissions are going to drive people crazy. Yeah. Well, and you can tell it's doing it. When Robinhood goes down, the blame is not to say, hey, Robinhood, you guys suck. I will never do that. The blame, I guess, or the obvious thing to see is people are being emotional. That's it, right? Long time ago, Betterment actually shut down throughout the day. They said, we're just not going to allow it. We're not broke. We're just not going to allow people to trade. They're being emotional. They made the call to do that, right? And if any customer calls me and says, I just want to sell and get out, well, hang on tight, because I'm going to give you a hard time about it, right? I'm going to give you details and stats, and we can work out a plan when things bounce, but I'm going to give you a hard time. And I think any advisor should do the same thing. I stand nothing to gain by you either being in cash or invested. You just have to be invested. Yep. That's true. That turnaround Tuesday is exciting, but boy, that Wednesday is starting to make a mark for itself, huh? Oh, yeah. I see that. You got the New York Stock Exchange closing. No, they're not closing. They're just going remote, and that's okay. The markets will be open. They will still do everything as normal. Everything's electronic as it is on a day-to-day basis. They're just going to do everything remotely. Most of the people that are in the New York Stock Exchange, they go to an office, right? They can work from home. They can work from their office, and they will. They're not shutting things, New York Stock Exchange, down. They're just not going to open the building, which is not a big deal. Yep. Yeah, I saw AMC closing their theaters. Cinemark, I think, was the other one, closed their theaters, and they should, right? And everything around me is closing as well. You got gyms closing, you got stores closing. The mall basically itself is done. There's nothing going on there. Movie theaters as well. Yeah. And look, at the end of the day, I mean, if it's a big deal, then we all should probably chip in and help try to stop this thing. It's just, it's going to hurt for a little bit. I get it. Yep. Wicked Wednesday. That's it. That's what we're going to call it. Wicked Wednesday, because that's 3 weeks in a row where Tuesday was good, but Wednesday was not pretty. So I like it. Wicked Wednesday. You get all the credit for that one. I love it. Will be a green day tomorrow. That's a coin flip, right? I mean, after hours, at least immediately following the market's close, the markets did close well off of their lows, and I showed that at the beginning. So it seems that, though, the pressure is to the upside for tomorrow. Yep. A lot of companies have debt to equity more than 100%. Yeah, I didn't say all companies were good deals. Remember, some companies out there deserve the punishment, and they got a little overextended. You can see that in their financials, and it's coming to roost, so to speak. But that's it. Yep. You're planning on buying out of the money calls. Well, using different products is okay. I mean, if you're interested in that, I don't have a problem with using a different product just because there's a little help leverage-wise there. Yeah. Yep. Oh, trust me, I know Disney's closed, man. That's my go-to. When a hurricane comes here and everything closes down, Disney's always open, man. Disney very rarely closes in a hurricane, and when they're closed, man, it's like the whole state is like, oh, I gotcha. Disney's oversold as well. Yep. Oversold. Okay, I'm going to wrap it up there. I know I went a little long on some things today, but just so important, guys. It's just so important. Take a look around. Use your head. Watch reruns of something. The news is killing me. It's on constantly. There are other things happening in the world. Just be safe about it. We know everything we want to know. They're not focusing on the people recovering. They're not showing any recovery stats. It's really unfair, in my opinion, and I get the concern and everything, but don't be emotional about your finances. If you're concerned about your safety, go do what you got to do. If you're concerned about your investments, ask yourself, what's the concern, right? What's the concern here? Is this going to be the reason the world ends? Simply ask that question, or share that with family if they're asking. Enjoy the rest of your day. We'll be back tomorrow to do this all over again, and we'll see. The activity and the excitement will continue, so I'll be here to cover it, and we'll talk to you then.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.